What's going on, guys? It's Killer. Welcome back to the channel. Now, today's going to be an important video. Today, I am going to be covering the Bitcoin bottoming formations. As you can already tell, I am macro bullish on the higher time frame. And today, I'm going to be covering a couple of historical fractal patterns which I've noticed which are developing and where Bitcoin is positioned currently, my thoughts, expectations, and what we could see in the next couple of weeks and months. As you already know, the bear market is very close to coming to an end, and we are in a position where we're going to see lots of manipulation, we're going to see lots of hunts, and hopefully this video is going to help you navigate through all of that noise. So, starting off with my first part of analysis here. Now, this is quite self-explanatory, and what I want to explain here is the type of characteristics we see after every single major retracement during a bear trend. Now, in this case, we saw we had a significant bear trend and shift in momentum from here. We broke all the way down from 125k all the way to 80k. Once we established our wick low, we can see the price bounced multiple times above that wick low before obviously breaking towards the downside. Here we can see we bounced 1, 2, 3, 4, 5 times, had 5 good impulses towards the upside, front running this wick low. We had that scam wick above the highs and then had that next decisive move towards the downside. The same pattern played out once we broke from 95k all the way down to 60k. The price went all the way down, got very close to that wick low, but front ran it yet again 1, 2, 3, 4, 5, 6 times, resulting in the sixth being a very strong impulse towards the upside, sweeping the highs, filling the higher time frame monthly FVG, and then reversing back downwards here. So a very distinct pattern we are seeing here is that every single time Bitcoin gets very close to that wick low after having this decisive move towards the downside, we temporarily front run that wick low, build liquidity within a range before pushing downwards. And we can see, based on what we have done currently, Bitcoin has had another decisive push towards the downside, right? We dropped 28% from 83k all the way to 59k. So what could we see develop over the next couple of weeks, for instance? Well, if we inherit the exact same characteristics as every other range, that means our established low at 59k could get front ran a few times, bouncing in this uncomfortable price region before deciding if we are going to break down or break towards the upside. So if we're talking based on the local time frame, we could see something very similar to the previous ranges where Bitcoin bounces another 2-3 times, sweeps the highs before pushing back downwards. In terms of the areas where I am looking for a sweep within this upper region around that 67 to 68k region. Do we get that? That is going to be solely dependent on whether Bitcoin can hold above this low. If we start compromising this low, then there's a very good chance Bitcoin bleeds slightly lower to that 50k region and then starts ranging around this price region, where it's likely going to be the macro bottom formation. In regards to shorts, I don't see any good risk reward ones unless we get to this price region again. If we cannot sweep in this price region, then taking shorts within this range is going to be very risky. But that is what we are looking at on the local time frame. Moving on to my next chart. Now, what we are going to be comparing here is we are going to be comparing the 2022 macro bottom to the current macro bottom formation, which we are seeing now. And we can see we are actually forming a very close similar pattern to the 2022 one compared to where we are now. So we had a range during 2022. We had redistribution. Redistribution happens in a bear market where we have a range in a downtrend, which eventually breaks towards the downside. We had redistribution. We had a drop. We had a drop to the low once again, and then had the extended drop towards the downside. We can see after that initial correction, we had a range being formed. We had a range being formed where we had a retest towards the upside. Then Bitcoin had another retracement towards the downside, and we can see the same pattern playing out this time around where we had another retracement towards the downside. So we are mirroring a almost perfect image from 2022 to the current cycle during 2026. So if we are going to follow this identical pattern here, what we could potentially see is Bitcoin ranging for the next few weeks before having that capitulation below that 60k low, breaking that low, forming the macro bottom, and then reversing towards the upside. So if we follow 2022, we could expect some more chop, a capitulation candle during that Q3, Q4 range, have the bottom form around that period, and then have that recovery towards towards the upside. However, this would mean that this cycle is going to bottom sooner than the previous ones. We can see here this extended into November, December, and January. Maybe this time around the bottom forms around September, October, or even in August, and then having that recovery into the rest of this year, December, January, February, where we start having the recovery a lot more sooner than the previous cycle. So this is one little bottom formation which I can see very plausible. However, there is another formation which I am observing as well, which I'll get onto now. Moving on to our next pattern here, this is more of a higher time frame outlook. We see a massive range being formed, right? We see a massive range being formed. We can see this is our established wick low after this massive correction. After this massive correction, we have our established wick low. We can see we ranged multiple times around this price region, and we can see that Bitcoin even swept the previous wick low recently. Now, this is more of a higher time frame and skeptical thesis here, but if we are around this price region where Bitcoin has already had its capitulation candle and we are not going to see one later this year, then that means if we keep ranging around this price region and bouncing after sweeping this sub 60k region, let's say we sweep this multiple times and keep bouncing, this could actually be our bottom formation as well, which is something which I'm also observing as an external confluence and pattern as well. So looking at the other pattern here, we can see this is a more prolonged range followed by another capitulation and another range. This is the scenario 1, both meaning that the bottom is very close. The only difference is the capitulation is slightly lower, 10 to 15% lower from where the current price is now, where the bottom forms, compared to this example where we are forming the bottom around this price region if the price keeps bouncing and reclaiming above that 59k region. In the end, if you're a higher time frame buy, it doesn't matter. The only difference you're searching for comparing these two is the fact that this is going to be slightly a higher bottom than the previous cycle, and the other alternative scenario, which I previously covered, would basically be a 15 to 20% drop from the current price, which in my eyes is nothing when you are searching for a 150% move towards the upside. So these are two formations which I'm observing at the moment, and that's the reason why I have been buying spot and I am in my 2x swing long position. Another important thing to observe is the market is always going through these ranges. Most of the time, 75% of the time, the market is ranging. We had our reaccumulation bull flag into expansion. The expansions happen very quickly, very violently. The same as these retracements towards the downside. They happen very quick and very violent. Where the price spends the most time is in these ranges. And the reason why the price ranges is to rebalance liquidity, trap liquidity, whether we be in redistribution or to reaccumulate, like this instance, right? But what you need to understand when you're trading these ranges is we are ranging 75% of the time. The corrections and the impulses happen 25% of the time. So you need to learn to trade the ranges. In this case, we had redistribution, a mark downwards. We had reaccumulation. Why was this reaccumulation? Well, that's because we were still in a bull market and we were testing key areas around this price region. So that's the reason why this was likely to be reaccumulation instead of redistribution, because we were still in a bull cycle. We had our expansion. It happened fairly quickly. Then we went through another range, expansion, another range. This was distribution, which matched with the previous cycle timing tops. Then we had our mark downwards. We had another range, redistribution, another mark downwards, redistribution, manipulation, and then another mark downwards. So you can see most of the time the market is ranging. What has Bitcoin done at the moment? Well, it's had another significant mark downwards. And we have sentiment extremes when we are on these corrections and impulses, right? When we have a big pump, everyone is euphoric and bullish. When we have a big dump, everybody is hesitant and not looking for long positions. And that is why the market goes through these uncomfortable ranges, because it traps liquidity, makes people hesitant, and that is why we could see another range form around this price region for Bitcoin, because we have already had the sentiment extreme move where Bitcoin dumped 28% towards the downside. So the moral of this video is to say that we are going to see some ranging and we are very close to the macro bottom based on the current price actions. So trade the ranges. This is what I'm looking at the moment. Hopefully this helped, and I'll catch you guys later.